Ahmed Ashfaq here, founder and owner of A&A Capital. So welcome back to our third weekly market breakdown. It's quite a successful series on our YouTube channel in terms of views as well as the returns that we've got from these market breakdowns. We've seen quite high risk to rewards completed. For example, in our first weekly market breakdown, I caught a 47 to 1 risk to reward. So if you want to see how I caught that and my analysis behind it, head over to our first weekly market breakdown and then the full analysis is there. So if you like what you're seeing on our YouTube channel and you'd like to subscribe to our daily analysis as well as our trades journal, which our clients value greatly, head over to our website and fill out the get started form. And then one of our team members will contact you within 24 hours. Also, we have our contact us form if you would like to ask us any questions, as well as my WhatsApp number over there, so as well as our email over here. So if you want to contact us, feel free. Also, if you want to keep up to date with our Instagram, you can click this link and it will bring you directly there, as well as if you want to read our offers. So we offer free daily analysis if you trade with our partnered broker, also live trading, trades journal, one-to-one mentorship, forex course. So if you'd like to avail of these services, head over to the detailed information and then purchase our forex course or our one-to-one mentorship. You can also join our public channel by clicking this link over here and it'll bring you directly there. So without further ado, let's dive into our weekly market breakdown. So my top pair this week is in fact the NZDCAD. Now there's not many setups this week. I'm not seeing some great opportunities, so hopefully they'll develop within the week. But yeah, my top analysis this week is in fact NZDCAD. So let's dive in. So what can we see? Well, we can see recently we've had a bullish impulse. Now that bullish impulse is because we have liquidity resting here. What do I mean by liquidity? Liquidity is just an area where retail traders will be taking their positions. So over here we have buy side liquidity. What does that mean? Well, we mean retail sellers will be selling over here. How do we know that? Well, they'll be, okay, look, double top. They'll see massive wicks and they'll be like, yeah, we're bound to sell, bound to sell. Encouragement of retail traders, and then bang. What do we see? Retail traders never win. Institutions push price higher, trigger their buy stops resting above structure, and then that gets stopped out as well. So that's why 95% of traders lose money. They trade retail concepts. So if you're trading retail, it's best to stay away from it. Or at least learn or practice on a demo account institutional trading. Not necessarily Elliott wave theory. I understand it's a very complex concept, but stay away from retail. That's all I can say. So yeah, let's dive in. So we saw these. We saw quite a large bullish impulse being completed. So 1, 2, 3, 4, 5 wave structure. Then after all the impulses completed through 5 waves, we see a correction wave. We see an A, a B, and a C. A can always be a 3-wave structure or a 5-wave structure. So we see a 1, 2, 3. B wave can be a 3-wave structure, 1, 2, 3. And then we see C wave is always a 5-wave structure. So we see 1, 2, 3, 4, 5. Okay? It's always similar ideas. It's all these waves that you begin to recognize. It's such similar concepts. So yeah, then what did we see? Well, we saw this ABC wave completed. How do I know that we haven't completed the full correction wave? Well, because we have liquidity resting there and we have a bearish order block that has not been met. Okay, so we have unfilled orders sitting here for institutions. We have retail orders sitting here that we're going to take out. That's why price is bound to go up higher. Okay, now I'll tell you why that's a good thing for us. It's a good thing for us because in terms of Elliott wave theory, whenever a B wave passes the 5th wave, we always see a very large bearish impulse. So let me show you, for example. What did we see? We saw the 5th wave completed here, then we saw the A wave. B wave hunted this liquidity and it crossed the 5th wave. What did we see then? Whoosh, massive bearish impulse. So what's that? Almost 450 pips. So we're expecting quite a good bit more. So I'll explain that later on in the analysis. So our A wave was completed, our B wave, 3-wave structure once again, A, B, C, and then we saw a 5-wave structure completed for our C wave. How do I know once again that's not our correction wave completed? Well, because we have so much liquidity resting here. We have a liquidity gap resting here. So we're bound to take this. So what did we see? Well, we saw our A wave, our larger A wave. So if I just make this bigger, to this, yeah, that's fine. If I make this wave A wave, then what's this wave going to be? Going to be our B wave. It's going to be a 3-wave structure. So it'll be an A, a B, and a C. A C always consists of a 5-wave structure. So we have wave 1, wave 2, wave 3, wave 4, and wave 5. What is this? This is called an expanding wedge. One of the rules for Elliott wave theory is that the first wave can never come in contact with the fourth wave can never come in contact with the first wave. But in terms of expanding wedges, it can. Okay, wrong selection, arrow. So, expanding wedge. In fact, I'm going to change my analysis up here. Okay, so we see our wave 1, wave 2, wave 3, wave 4, wave 5. So what are we going to do? This is going to be considered our 3rd wave. This is going to be our 4th wave. And then we're going to complete our 5th wave up here. So let me get this. This was my prediction. So many people were selling here. I was like, no, this isn't the sell. What did we do? So we encouraged retail sellers through this engulfing candle, which caught this liquidity. And then we're collecting our unfilled orders right now. And then we're going to go bearish. So where do I expect price to go? Here, here. So I'll just take away my prediction. So, so if this is our 3rd wave and this is our 4th wave, it's now no longer an expanding wedge. Instead, it's now completing our C wave as an impulse. So, what did we see over here? If I dive down to the 1 hour, what are we seeing? We're seeing so many institutions in play. Okay, so what's this? Liquidity void. Filled? No, it's not filled. So we know price is going to eventually come back and balance itself out. What do we see over here? We see wave 1, wave 2, wave 3, wave 4. What are retail traders doing? Oh, we have a bearish wedge. Let me sell. And then what happens is price breaks. What do institutions do? They manipulate retail traders once again, hunt their stop losses, and then go and collect their unfilled orders. Now, so we had buy side liquidity resting above here. We hunted that, broke it, and then we go up again. How did I know that once we hunted this buy side liquidity, this wasn't the bearish impulse down? Well, because we broke a wedge, so we know that is going to be manipulated eventually. And, well, because our 5-wave structure was not complete. We had a wave 1, wave 2, wave 3. So all these waves within our wedges are going to be 3-wave structures. So we have wave 1, A, B, C for wave 1, A, B, C, wave 2, A, B, C, wave 3, A, B, C, wave 4, and then we're completing wave 5 right now. So that's going to be our B wave going to be completed, and then we're going to see our massive impulse down. So yes, we've hunted this liquidity once again, retail sellers selling, but we have an order block on the 4 hour sitting over here. Typically, I like to look around the 0.5 fib of the order block to take my position, which is why I'm not going to take my position yet. However, that doesn't mean I won't. If we do push down, what am I going to wait for? I'm going to wait for a break of market structure. I'm going to wait for a return to origin to trigger these unfilled orders, and then we're going to push price lower. Okay, that's where I'm going to get on my limit order. That should trigger after we break our structure, return to origin of our impulse down, and then we target this liquidity resting here, and then our 4 hour liquidity also. So once we've hunted this liquidity, why do I think price might push down right now? Well, if we go to the 5-minute time frame, what are we seeing? Same thing. We're saying equal highs form. Retail sellers selling once again, price manipulates it and then breaks market structure. So if price comes back here and we see confirmation, we may take this trade and then we'd put SL to entry quite quickly. But I do still think price is going to go up and collect these unfilled orders resting at this bearish order block. So, yes, that is my analysis for NZDCAD. In terms of targets, what am I going to target? I am going to target liquidity, because what is price attracted to? Price is attracted to liquidity. We have a liquidity void over here, so we're going to fill that. We might push up here, so I'd put my first targets at this potential bullish order block. What else would I do? Well, if I'm going to put this as first targets, there's no point putting this as first targets. Second target, sorry. So what I'm going to do is I'm going to put the next liquidity pool as my second target. In terms of third targets, we have this fair value gap over here. We had this manipulation, so I do expect price to push up higher off here, but I definitely think we are going to push it down lower. Why? Because price is attracted to liquidity. Retail sellers will be selling here. So this is a long-term trade that I've mentioned quite a bit in our public channel. I've been waiting for this trade for quite a while. So yeah, once price reaches up here, I'd look for my entry confirmation either on the 1 minute time frame or the 5 minute time frame once we get into our point of interest. And then I take this trade with a 12 pip SL is too large. I'd probably take this trade with a 10 pip SL, leaving me a 60 to 1 risk to reward. Not bad. So risk what, 2% of your account and make 120% back. So if you're risking I don't know, let's say you're risking, what, €100, there's a potential to make 6k off this trade alone. That doesn't mean you risk €100 if you don't have the capability to do so. As we always mention, one of our key ANA rules are you only risk what you are capable of losing. That's the key to Forex. The key to Forex is staying in the game as long as possible, not about losing your money like retail traders do. Okay, so another area that I want to show you. I don't know if I mentioned it, but yeah, actually I did, about the break of this wedge. So yeah, beware of these retail patterns, about these double tops and all of these like head and shoulders patterns, because obviously the algorithm of institutions creates these patterns in order to generate liquidity and to hunt the retail traders. So yeah, hope you guys like this analysis. Feel free to leave your comments in our comment section and like our video, and then also if you go into our description you'll be able to join our public Telegram channel, and if you like our services, head over to our website. Best of luck in your trading, and wish you good trading.
Hey traders, hope everyone's doing very well. Welcome back to another weekly market breakdown after the weekend. Hope everyone had a lot of rest and we're all ready to get back into the game. My name is Ahmed Memon, owner of ANA Capital Limited, and I will be discussing EJ, the Euro-Japanese yen. So as you know that the yen is considered a safe haven, so a lot of news positive for the yen usually pushes in our favour, which is obviously I have a short bias in this and it's been going on for the last 2 weeks. So on Tuesday the ECB, the European Capital Bank, Central Bank, Isabel will be speaking Monday and Tuesday, and her speeches usually indicate a lot of where the euro will be going and usually tell us where the euro will be headed. President Lagarde will also be speaking from the ECB. He's the president, obviously his words mean a lot more, and this will happen on Tuesday. This will help us pump the euro. I personally predict that the euro is going to be weakening, so that's what the Japanese yen will strengthen and the price will push back down. But his speeches usually give us the future of the monetary policy and the interest rate shift. He determines like the short-term positive and negative for the euro, you know. The yen, there's not a lot much news in this week, but there will be the CPI for Tokyo coming out, and if it's higher than expected, it means positive for yen, which is exactly what we want. If it's positive for yen, a lot of investors will be pushing their money into the yen, and then as it's considered a safe haven as well, due to the uncertainty of the dollar at the moment. Hopefully the yen should start dropping, should start gaining strength, and it will drop against the euro. Let's start over to the analysis now. Push over to the daily to start off. So yeah, As you can see, our last entry was roughly around here, and we took it. I think it was 2 weeks ago on the web. 2 weeks ago in the Sunday market breakdown, I said that it would start dropping from around here, and entry was perfect. We were almost hit out around here, but thankfully the stop loss was just big enough. But I think it was 2 or 3 pips that we weren't stopped out. This entry wasn't sent into the official group as there wasn't a really big indication of the big fall. We were just going to wait for it, and then we just didn't take it overall. I took it personally myself because I believed in it, but it was the risk to ratio wasn't that big as we thought. The stop loss could have even been bigger, but as you can see that there wasn't much sideways movement around here, which when we were taking the entry, which was good, but there wasn't enough indication in the candles. As you can see at the moment, it's finding it hard to break this key level at the moment. Previous rejection, etc., caused by uncertainty as well. Like there was a lot of uncertainty here, which was causing it difficult to break here. Also, a lot of here. That's why we're looking to scale in around here. I'll explain why we're doing that as well. Yeah, so the last entry it's roughly around 70 pips going at the moment, going pretty strong. So our scaling has a much better ratio as well. So we're looking to hit this hard at a 23.8 ratio. It's risking 1% of your account. It's unbelievable the amount of pips and percentages you can gain. So let's look at the 4 hour just to see why we're entering this. So I think it was yeah, so here we could see that investors was pushed price straight back up, and then it went straight back down from our entry. Our entry was perfect around here. Although most of the people in the premium group wouldn't have taken it, but I posted it on the market breakdown, so a lot of people would have still took it. As you can see, that there was a lot of rejection. The one candle was this one candle was hunted by institutions just to stop everyone from making a lot of money, basically. But as you can see, we knew where the market was heading, so we had the perfect entry. This is usually taken to break these equal highs. Equal highs is broken by institutions to stop people from making money and to stop a lot of money being made. As you can see, it was also done around here as well. Equal highs were created, but rejection, and there was a key level retest, but it was broken back down. It was a huge liquidity gap created around here. This liquidity gap was straight away brought back down, and there wasn't it was basically created to break these equal highs, which institutions often do to avoid people from making money. The SSL can be seen clearly around here. This is called sell side liquidity for institutional traders, and it usually helps a lot of people to make. It usually tells us where the market is heading and where the liquidity is being pushed. For retail traders, this is called the lower lows, and the lower highs are created up here. So that's how retail traders would be trading, saying, okay, lower lows are created here, lower highs are created here, but then this kind of would have knocked them out. So then they would think that lower lows are created here, lower highs are created here, so the price just pushed straight back down. So a lot of retail traders would have tried to sell here, but institutions pushing straight back price back up to this BSL. This is the buyer stop losses. This is where they're pushing straight back price back up, and then they're going to push back down. So they're obviously not going to be losing any money with that. That's how institutions trade. So they're going to be pushing price back up to here, where we're going to be looking to scale our price back in. I placed the entry just above the BSL, so if there is a bit of a manipulation or something like that, we'll keep an eye out for that if our entry needs to go even higher. But that is something I'm looking forward to push price straight back down. Sorry about that. Yeah, there was also a really nice parallel channel created here where we took our entry out after it broke back out. So it would be roughly around here. This is where the channel is at the moment, so hopefully this enters back into the channel from here and then comes back down, but it's having great difficulty breaking this key level around here. Like previous equal lows are here, previous equal lows are lower, so we know that institutions will not push price straight back up before breaking these equal lows, and as that's the only way that retail traders won't be making money. And retail traders and institutions know that the price is going to be pushing back up overall, as the euro will start to gain strength in a couple of weeks maybe. Um, so yeah, that's pretty much why I'm thinking that the scaling entry should be around here, and price will be pushing straight back out. Like, this liquidity gap is now fulfilled. It's completely fulfilled, and that showed why the price pushed straight back down like in these last couple of days. But then, as you can see here, same things happening, repeating again. So we should see this big like manipulation candles forming around here, and then boom, price pushes straight back down. So yeah, this type of SL hunt I was talking about earlier, these SL hunts, they're very key for retail traders, as they will knock out your stop loss by a big amount. But institutions do this very often, so that's why we're very careful, and we look for our entries, and we also keep an eye out for them just before we set them. Caesar, yeah, that's what he does. He sends a lot of buy stops and sell stops, which is very good in the market. But couple of times, if you're not lucky or if you're not watching it well, you might be removed by these SL hunts. So as retail traders, I said earlier, these retail traders will be thinking that higher highs are created, lower highs are created here, so the price will push straight back down. But the liquidity is now being pumped here, so you can see that these candles, there's not much rejection, and price is pushing up strong now. So we should see some nice doji candle or candle created here to look for our entry, and boom, price will be back down. I think it was 1 hour was why I. Yeah, it was a really nice doji candle created around here, so that's why I took my entry last time. So we were looking for something similar on maybe the 15 minute, because I think that's really nice for the euro yen. It's not considered good for the other pairs, but euro yen 15 minute is really nice. So look for a doji candle in that somewhere around here, and then boom, price will push back down. If anyone wants up to date details on this trade or any trades discussed in the market breakdown, just click the link below, join our Telegram group chat, or text any of the owners, myself or Ahmed, and we'll get in touch with you on how to get you started. We have the free discussion group if you want to join as well, where there's over 200 traders. We all discuss pairs, we all talk about different stuff, we give opinions on different pairs in the market. So it will help your trading to a different, it will bring your trading to a different level. So if you're interested in that, even just text us from the links below, or even comment in the section below, and we'll get back to you as soon as possible.
Good morning, everyone. Today is November 22nd, 2020. And what we're looking at right now is the weekly chart on the dollar index and what just occurred. So pretty much there hasn't been much going on with the dollar index. It's just been a lot of sideways movement going on, as we're seeing here. Like last week, last week we saw a bearish topping tail being formed here. That's right next to this bearish engulfing, and then this week that just passed, we just saw another small basing candle being formed on the weekly. So basically, this is just indicating that nothing has changed with the dollar index. Like, it's still moving pretty sideways on the weekly. So we're still in this range right here between this price number 94.65 and then this range right here at 91.77. So we're still in this range, and so it's just gonna take some time for the market to do what I'm anticipating to do. It still has to go through this level of support right here on the smaller time frame, and then break right through before it can go to this area of demand, and then take off to the upside. So let's go down to the daily time frame for me to see in depth what I'm talking about. Yeah, so as you can see here, it's been a lot of sideways movements these past couple of days with the dollar. So not much has been going on. And another reason for why it's been moving sideways, because like I said before, this is all this area right here is support. I'm gonna show you guys right now. all this right here, where I have this box, I have this box located, all that it's area of support. That price was having a hard time breaking through. It's like a floor. It was having a hard time breaking through this floor. So yeah, that's another reason why like price hasn't been really moving much, because all this is support on the higher time frame that price is respecting. And once again, this is the daily chart for the dollar index. So what I'm anticipating is to see a pullback to the upside around here and then fall down. As we can see here, according to our trend on the daily time frame, we have a somewhat sideways downtrend move. What I mean by sideways downtrend is that we have lows being equal, being created are equal, and then highs where this recent high is lower than this high up here. So it's sideways downtrend. So what I'm anticipating for price to do is for price to move up a bit. I'll show you guys. Go up a bit around here, test this area here, and then bounce right back down. And then price could also respect this level of support. Come back up a bit, this and that, and then probably test it again, go up, and eventually just drop. The reason why I say eventually, at some point this thing can drop to the downside, because you have to look at support resistance like glass, like a glass. The more you keep punching the glass, the more it gets weaker, and the more easily it can break. And also you can see it as ice as well. Like the more you keep smashing the ice, eventually the ice gets weaker and it starts to break little by little. So yeah, so this is how you have to see support and resistance. So resistance is area on the top, and then support is area on the bottom. So yeah, that's how you see support and resistance. So yeah, so what I'm anticipating for this week, I'm anticipating a little move to the upside around here, around this area, at least the most around 93.51, and then a drop back down to the downside at some point. So yeah, so what I'm anticipating for this week is to see some movements and volatilities. I'm expecting that, especially with news coming up as well. There is a lot of news coming up this week, especially with the GDP meeting, the G20 meeting that's going on right now at the moment. I will show you guys in depth what I'm talking about. Let's see, Forex Factory. I'm checking it out on my phone. What's going on? Matter of fact, I can just check it here real quick instead. Forex Factory. I can just show you guys real quick what's going on. Yeah, today all day Japan news. We don't have much going on. Yeah, so I'm expecting a lot of things to go on. Let's see. Yeah, so by Wednesday, I'm expecting to see the dollar index to have some movement, especially with the FOMC meeting. So I'm expecting to see something on Wednesday. Yeah, so actually it's not really much going on. Like the only thing that I expect to see go on is euro. Yeah, euro. I'm expecting to see euro and pound to move around a lot this week. So yeah. So when it comes to the dollar, I'm only expecting to see movement like towards the middle of the week, which is Wednesday. And then towards the end of the week, like Thursday and Friday, to expect the same results, like a little bit of sideways movement, because it is a Thanksgiving holiday and banks and institutions won't be trading. And when they're not trading, you won't get a lot of movements. A lot of candles that will be formed, it'll be created by retail traders. So we won't get as much like strong move to the upside or strong move to the downside that are created by banks and institutions. So yeah, so that's pretty much it for the dollar index, and I'm expecting to see um, at least the same outcome like what we saw last week this week. So yeah, it's most likely gonna be another weight game that we're gonna have to endure. That being said, I am out. Take care, everyone, and be safe.